Hello, ladies and gentlemen. Welcome to this week's episode of In Focus. The KOSPI has been on a record-breaking rally since the first day of the year, when it rose beyond the historical high set in 2007 before the financial crisis. As optimism abounds for Korea's stock markets to rise even further, let's consult our experts on the direction of market movements and the economy this year. Join us after the newsreel.
Since the KOSPI broke through the significant resistance line of 2,000 points last December, it has been continuously trading in an uptrend to surpass the historical high of 2070 and looks set to rise above the 2,100 barrier. Gains were led on by leading exporters in IT and automobiles, whose profits were boosted by the exchange rate and a recovery in global demand. Even as analysts foresee further highs ahead for the benchmark index, global risks and market conditions continue to add uncertainty to the mix. The recovery of the U.S. economy remains weak, while the Eurozone sovereign debt crisis continues to loom as a major risk factor. Meanwhile, major indices such as the Dow Jones and the S&P have also been making significant gains, indicating a general mood of optimism in the market.
Welcome back. We have two expert guests in the studio today to discuss the rising KOSPI and its outlook this year. Joining us on my right is Mr. James Rooney, Vice Chairman of the Seoul Finance Forum and CEO of Market Force. Thank you for joining us.
Good morning.
On my left is Mr. Jo Hong-rae, Head of Global Strategy at Korea Investment Holdings. Welcome back to the program.
Thank you.
Let's start with a discussion of the current state of the Korean stock market. This year began on a very positive note for the Korean stock market, with the KOSPI breaking its record high in 38 months. Stocks are continuing to trade higher and higher. What has been the background behind this positive?
It's an easy question because, stock price is made of two things. Number one is the corporate earnings, and number two is the monetary liquidity. And last year, year 2010, and also year 2009, in two respects, we had a fantastic 2 years. For example, the Korean companies made 50% annual growth in their earnings for 2 consecutive years. And then also with respect to the monetary liquidity in the global market, we do have abundant liquidity, especially supplied by the U.S. or other European countries. So those two things made the record high KOSPIs. And the result was we do have fantastic stock prices, especially in the blue chips and large cap stocks. But in other sense, that is a kind of another expression of the bipolarization of the internal structure of the Korean economy, especially bipolarization between the manufacturing sectors and the services sectors, because those blue chips or large cap stocks are mostly manufacturing sectors.
See, Mr. Rooney, your view on the positive trend?
Well, I think Dr. Cho has made a very clear expression of what's happened in the past, and the really interesting question is what's going to happen in the future. And as you know, it's always very difficult to make predictions, especially about the future. But I think the consensus is that the stock market still has more room to move upwards. My own view is around 2,500 will be reached sometime this year, maybe around the middle of the year after we see the earnings for the end of the first quarter. And I think that's a reflection of the robustness of Korea's stock market today. During the last 12 months, we've had many challenges to it. We've had the North Korean events, the drama that we see at the border with North Korea. We've had countries in Europe that have been very challenged by their financial circumstances. And yet, KOSPI has soldiered on, going up and barely missing a beat, even in the worst of those events were happening. So I think the Korean stock market today is very robust because it's based on sound fundamentals, and those fundamentals, I think, still have plenty of room to play out.
I see. On that note, many analysts agree with you, and they forecast that the KOSPI may rise to from 2,200 to even 2,800. Do you also see favorable conditions for Korean stock market coming into this year?
Unfortunately, I do have a little bit conservative view, especially a little bit conservative than Mr. Rooney just mentioned. I mean, we expect 10 to 12% of earnings growth in Korean companies. And you remember, I just mentioned that we witnessed a 50% of year-on-year growth in earnings during the past 2 years. So that is a kind of peak out of Korean companies' earnings. So if we have same valuation multiples, such as price-earnings ratio, something like that, then we can expect 10 to 12 or maximum 15% upside potential in the KOSPI index. And that is my little bit conservative view.
I see. Mr. Rooney, you had a little bit more optimistic view on stock market this year. So what would be the driving force, if
well,
there is?
I think I fully agree with Director Cho in terms of the earnings picture. I think there is room for continued earnings growth beyond what we can expect this year, and that's positive, and investors will look at that. But I think perhaps the most important thing is the potential. It's not a guarantee, but the potential for the Korean stock market to undergo some re-rating. In other words, for investors to view the earnings more positively and assign a higher P multiple, a higher price earnings multiple. Why would they do that? Well, I think first of all, Korea gained significant visibility and improved credibility last year with the successful G20 summit. And Korean companies are now going out into the world, I think, in ways that have never been seen before. Whether it's automobiles in Europe and the United States or power stations in the Middle East, that visibility, that credibility, those excellent products is, I think, making people more familiar and more prepared to consider Korean investments sound because they see the products that people are making.
Well, I totally agree with you. I mentioned that we have a bipolarization in the Korean economy. And on average, we may have KOSPI rise up to 2,200 points or 2,300. But inside the market, you're going to see a 50% rise in the stock markets of certain companies if those companies are in a good position in the industrial structure or in the global market.
So there will be players who perform much better than others.
So it is going to be very important to pick right stocks.
I see.
Well, and I'd like to add to Director Cho's comment about bipolarization, because I think that's very important. What's really happened is that a small number of very substantial blue chip companies have become better known, have improved their earnings quite visibly, and have been the driving force in the aggregate of the KOSPI index. But as Director Cho already mentioned, there's a polarization where the manufacturing sector is very well established and highly respected, but the service sector is still lagging significantly. The other bipolarization, if I may put it that way, is that the large companies are still the ones that people pay attention to, and there is not enough attention paid to the smaller and medium-sized companies. Now, clearly, some of those companies, I think, don't necessarily deserve to be paid very much attention, but there are very interesting hidden gems below the surface. And the interesting point will be if investors can start to see those companies, then I think we have an additional benefit in the stock market that could happen this year. But it's unlikely because that condition of small and medium companies not getting enough attention has persisted for quite a long time.
Well, in comparison to the last high point in the Korean stock market in 2007, what is more distinctive is the more significant role played by the foreign investors. And I'd like to know what is the background of that kind of situation, and do you think what kind of implications does it have in the market?
Yes, probably the same logic can be applied to why foreign investors are investing more in the Korean market. First, they expect higher earnings. Second, they do have a great amount of money. In case of money supply, in the U.S., after the outbreak of the economic crisis in the year 2008, they just doubled of the monetary base supply by the Fed in the U.S. But unfortunately, the banks in the market, they didn't supply that money to the market. So the abundant storage of a big amount of money was going out of the U.S. towards the emerging market and towards the risk assets, including stocks and some of the commodities. And that is what we have been witnessing during the past 12 or 18 months.
I think there's an important second factor that plays for international investors beyond what we've already mentioned, and that is that if you look back at the time of the global crisis, the Korean stock market turned out to be one of the few markets in the world where there was ample liquidity. It was the place where investors were able to sell quickly their shares in stocks and get enough cash to deal with their obligations back home. That experience, that gave an additional credibility to the stock market that this is a liquid market. And I think, therefore, investors are more comfortable to come to markets that are liquid. That liquidity is crucial. We need to make sure that the Korean stock market continues to be one of the most liquid markets. The liquidity, interestingly enough, I think, is largely provided by domestic investors who are not known for their fundamental investing. They're more like recreational gamblers, but their activity in the market provides that liquidity, provides the quick exit when people need it. And for investors, that's extremely crucial.
That high level of liquidity really helped us to be included, the market to be included in the FTSE index, benchmark index last year.
I see. So both the outside factors and the domestic factors contributed to the activity, the positive activity in the Korean market.
But there's one little irony when you look at all the things we've mentioned and the strong condition of the Korean economy. Korea, in my view, is now pretty much a fully developed country, and yet many of the international indices still reflect Korea as a developing market, as an emerging market economy. If that should change, if that rating should change, and we get included in some of the developed country indices, then a lot more investment will flow to Korea because investors are restricted in where they can invest. So should that happen this year, I think that's an additional boost, but it's not reflected, I think, in the numbers that we've been talking about.
Well, we've been mainly discussing positive factors that would play in this year's stock market. Let's talk about risk factors this year. On Thursday, the Bank of Korea raised the benchmark interest rate from 2.5% to 2.75% due to inflationary pressures. And this sort of momentarily stumbled the KOSPI. Further hikes in the interest rates are expected this year. And could you tell us how this would affect the market?
Yes, first of all, I like to little bit predict what the BOK people are going to do within this year. Probably we are going to see one more or two more times of a rate hike, especially during the first half of the year, because the first half of the year is the period when we are going to see more inflationary pressure in the market. So as a result, we are going to see a 25 basis points higher than the current rate, or 50 basis points higher than the current rate. But the bottom line is, in Korean market, the BOK's rate does not much impact on the stock price, as we can see in other markets like U.S. Traditionally, those interest rates, which is determined by the BOK, is kind of lagging behind the market. So if they just worry about bubbles in the market or inflation in the economy, then they raise the rates. That's the experience in the past. So the rate hike is not exactly going to harness the KOSPI index, but instead it is a kind of evidence that we did have a good market.
I think, as you mentioned, the rate hike was made in the context of BOK being concerned about inflation. And you asked about risk factors. I think it's very fair to say that this year, there is severe risk of inflation, especially in things like food and other basic commodities, a little bit like we saw some 3 or 4 years ago before the global crisis came, because demand is starting to exceed the natural supply, and that will push up prices. The problem is, I'm not sure that that sort of inflation can be affected in any way at all by managing domestic interest rates. So although it's a classic maneuver when you face inflation, I don't think it's a solution. And there's a second risk, I think, that we face, which is the FX rate, the foreign exchange rate. That has been very volatile over the last number of years, I think unnecessarily so. And if that continues to be volatile, that also has an effect on how investors will view Korea. The interest rate hike arguably increases the upward pressure, the strengthening pressure on the won, because investments in Korean fixed income products then have a little bit more return perhaps than other markets. And the danger is that Korea's interest rates get away significantly from the extremely low rates that we see elsewhere in the world, and therefore Korea starts to attract what could be hot capital. The government, I think, is looking at that and thinking that they need to make interventions to avoid problems from that. The danger is actually that their interventions will be worse than the problem that exists beforehand. So we need to be very cautious.
Korea is not alone in raising the interest rate, and actually the issue of interest rates, rate hikes, and fiscal austerity is common all over the world. It's their effort to go back to business as usual after the crisis. And we are particularly interested in the Chinese market and what the Chinese governments do. So how do you see for the fiscal austerity from China and how that will affect Korea?
Oh, huge impact from China. Let me put it this way, with some risk of oversimplification. The earnings of Korean companies are from China. The money is from the US. So if BOK raise the interest rate, I do not worry that much in comparison with the case when the US Fed starts to raise the interest rate. And also in China, they do have a huge amount of inflationary pressure. And the Chinese government or other policymakers, they try to harness the speed of the economic growth. They used to grow at the pace of like 10% per annum or 11%, which is fantastic and unimaginable. And this year, they like to control it like 8% or 8.5%. And the reason why they do that is that they don't like the inflation because it hurts Chinese people's life. And how can they they can accomplish their policy goals? They like to control the investment in the economy. And this is the story this is a story where my conservative view is based on the investment sector in Chinese economy is where our companies are making money. So even though we do have 2 percentage point lower real economic growth in Chinese economy, but the Korean companies is going to see probably 5% down or 10% down in their earnings or in their sales this year.
Well, however, the greatest risk lies in the sovereign debt crisis in Europe. And although there is a bailout plan, many people worry that that might not be sufficient to solve problem in such large economies. So how that problem will affect Korean market?
First of all, we like to take a closer look into the European continent. Last year, Greece and Ireland, those countries went for the bailout program from the ECB, European Central Bank, and IMF. And this year, from the beginning of the year, market participants are worrying about Portugal and Spanish situation. And even some people are mentioning France. It's kind of a real contagion effect. But in January, in this month, the Portuguese government bonds are successfully rolling over. That's a good part of the story. And the bad part of the story is in March and April, more than 5% or even up to 10% of the entire those countries' government bonds are facing maturity. So market will see what happens in March and April. And if they are going to be successfully rolling over their maturing government bonds, then market will be in a very comfortable psychology. And but who knows, if there is anything bad happens, then it's going to be a kind of a credit situation, which is triggering an unwinding of the dollar carry trade or foreign investors' money out of the emerging markets.
Let me look at it a little different way. If you look at a very simplistic economic level, the countries that have these challenges, Ireland, Spain, Portugal, Greece, are not significant markets for Korea, and they're not significant contributors to the global economy. So one could take the viewpoint that the stress that they're experiencing is not necessarily a negative for our own economic performance. However, I think we have to look at two factors that are playing right now. They are creating a huge stress within the European community, in particular on the euro, and raising questions of whether people should stay in the euro. The risk is, I think, that the euro breaks apart and people return to individual currencies. I think that would be extremely negative, very disruptive to European economic activities, and very disruptive to all the players who feed into that, like Korea and China. The other side of that coin, though, is very interesting. As you mentioned, the Portuguese were able to find buyers for their bonds this month. But who was the buyer? The buyer was China. Who has all the money in the world? The Chinese. Who has the greatest interest in economic stability, not only within their country, but in the world around them? The Chinese. And for them to show that they are prepared to be, in a sense, the lender of last resort to those countries in great difficulty shows a wisdom and a foresight, I think, that is remarkable and is potentially the big factor, the quiet and unknown factor that may allow us to avert some of the catastrophes that we could otherwise face. So those two, positive and negative, huge risks on the one side, but not where you might think of them coming from, and a potential balancer, again, not where you might think it would be coming from, because it's not an internal EU thing. They've put their money on the table, of course, but ultimately it needs to go beyond that, and for China to step up to the plate, I think, is wonderful.
Well, since we are getting near to the closing time, last year the biggest players in the Korean stock market, or the ones that led the market, were the automobile industry and IT industry. So what would be your advice for investors in Korean market for year 2011?
Well, you know, it's interesting. I don't know how much the market is looking forwards in the reflected price in the stocks, but it seems to me that Hyundai Motors, for example, has done a remarkable job last year, getting recognition in its markets. I think that's a momentum play that still has room to go. Samsung Electronics is a player in the global IT arena in more ways than we can count, whether it's in mobile phones that they sell under their name or components that they provide to people like Apple, whether it's their now participation in this iPad market, the tablet market. So again, there's huge momentum that is far from playing out in both of those areas. So I think we can expect to see these blue chips continuing to be an attractive investment. But you know, the really valuable thing would be if we could see second tier and third tier starting to get attention and credibility.
Well,
but in case of automobile industry, I like that their good performance will continue because of the motorization in China. These days, Chinese automobile sales are growing like 30 to 40% per annum. So this is the very first phase of their motorization. And the most beneficiary of this motorization in China is the Korean companies, Korean automobile companies and automobile part companies. And for other industries, I like to advise everybody to take a closer look into individual companies. Yeah, that's what we should be in this year.
thank you for being with us today and sharing your insights.
You're welcome.
Although risks still lie ahead for the global economy, we stand at the beginning of a year with strong optimism for further recovery and growth. The Korean economy is strong in fundamentals, and chances are high that its companies will have another successful year for the benefit of all stakeholders. Let's hope for more good news and vitality in the economy this year. This has been Park Sang-mi for InFocus. Thank you for watching us.